Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Thursday, December 19th. Big day in the markets. We knew that there was going to be some volatility picking up. Ben Bernanke came out with the FOMC statement stating that he will keep rates at extreme low levels for quite some time, pegged the unemployment rate to his tapering at 6.5%. He did mention he was going to pull in a little bit of the asset purchases by $10 billion, which is absolutely nothing. It's a small little crumb of what they're putting into the markets. That's why the markets rallied. They loved it. But prior to that, I'm going to show you. You can see what a wild, wild day. And before the 2 o'clock statement, really nothing was happening until then. And then once the statement comes out and you have him speaking at 2:30 going into probably 3:30, 4 o'clock, the press conference went on just about the end of the day. That's why you don't trade Fed. It's not worth the risk. I'm not a big fan of trading unless I see something exceptional. Other than that, now we digest what happens. The markets of any type of uncertainties out of the way. We have 2 weeks left of trading, and it looks like the Santa Claus rally will now again commence. So what are we looking to do? My thing right now is I'm going to be looking at for some market weakness to buy into going into the end of the year. I'm not looking to build positions unless you're obviously doing some sort of an option strategy like selling call credit spreads, put credit spreads. But obviously if you're looking to get long the market, I would do it via put credit spreads. That would be your best bet. But I don't see obviously any big market weakness going into the next couple of weeks. You might get a day or two maybe down, but that's going to be something that really I would recommend buying into. I wouldn't be looking to short the market. It's just crazy to do. Markets are fueled to run higher. Do we get some market weakness in 2014? Sure. I'm going to put out a longer term video next week on the outlook of 2014. However, that short-term weakness should be bought into because the Fed is not going away anytime soon. And they are committed. Janet Yellen is committed to continue what Ben Bernanke started, and I do not see any crazy weakness. Yeah, if we can get down to let's say 5%, 8% on the market, and even then, that's not even a deeper correction. Now, anything could change, right? So we're just talking here. So moving forward, we'll discuss that going into the new year. The weekly charts still look very, very bullish with plenty of room to run. And again, I'll put that out sometime next week. All right, so let's go right into the charts. Now, here are my levels that I had. As you can see, they're quite good. They actually hit on the low here. And then we actually rallied back up, and look what happened. We hit it right to the T, and now we're down about 2.25 handles, and that just kind of faded right into a bull flag, and we broke up above this 1797, which obviously is a bullish area here, and that needs to really hold. We wouldn't want to fade too much lower. Even if we got back down to 1787, 1790, I don't think that's going to be detrimental to any type of a reversal signal. But I want to show you something here. Here's a 5-minute chart. Now this is the live ES continuous contract, the March contract. This is what really transpired here. We had market sell-off, and then we ripped right up. And before we ripped up to the upside, we actually sold off down to 1760. Why would you want to get in front of that? To me, it's absolutely ludicrous. Doesn't make any sense. And the reason why was, well, the markets are rallying. Well, why don't you get long? Well, you can't. Here's the thing. 2 o'clock, the FOMC statement comes out. 2:30, Ben Bernanke speaks. That's even more important because Ben Bernanke says one word wrong. All of his gains are gone. Okay, and it doesn't matter that it would go lower and then would just drive back up again. I've seen that many times. I just tend to stay away. Let the price action dictate where we're going, and I think that we are going higher. I think we're going to at least 1820 to start, and then probably 1830 to 1835 to finish off the year. I know it sounds crazy, but that is not a crazy forecast. So anything above 1820, 1830, even rounded, plus or minus 10 points, I think that's where we're going to finish the year. And then we could even move much higher going into 2014. So, don't get crazy with the shorts just yet. Let's see what the market gives us here. Let's run into some indicators. But I will tell you, the indicators are telling us that something still is wrong. We had a huge move up. Now, the Dow Jones and the S&P played catch-up. They did. IWMs were rallying previous, so they did play catch-up. That's why you saw a big up day in the Dow, 292. So that's also take that with a grain of salt as well. But you see the indicators here where we moved up, but we didn't really quite ran so hard to the upside with the tick here. Okay, take a look at the McClellan oscillator. McClellan oscillator has plenty of room to run to the upside before you even think about getting overboard. Okay, so that to me has plenty of room, and that's why I say I would be looking for obviously new highs in the coming weeks. The new highs, new lows. Did get a good bounce up, 153 ticks higher, and we took out that little local top here. So now if we could see this start to move up a little bit, this would entice me even more that, hey, we got some good buying going into the end of the year. The VIX, what can I say about the VIX? We did say we needed a close lower, and sure enough, boy, did we get a close lower. Wiped out 5 days in one candle. And I think that's really, anytime you get market weakness, you have to really short the VIX. The VIX is not worth buying. This is more like I always say, don't short crude oil and gas. I would never play crude oil and gas on the short side. Not worth buying the VIX long. It's just not worth it unless you get some extreme weakness or you get some major crazy rally where you get a crazy dump here. But even then, these tops were big market drops. You see, and this is where you would be looking for outside band, inside band. That's where you want to. Unfortunately, it closed lower, and it didn't give us a chance to get short the VIX. And can you get short the VIX? Yeah, absolutely. You can buy puts. But the thing is, you don't know what he's going to say. So that's just basically, a 50-50 gamble, and that's not what we do in trading, right? We take the probability and put it on our side. So I wasn't looking to just go buy VIX puts. But again, it's not a bad trade setup, and we just didn't we got a big down candle, and that went back to the mean again. So, again, VIX lower, volatility lower, market's going to go higher. Okay, stocks above the 50-day moving average. We did get across to the upside. We're down to that 55 area, but nothing really to write home about. But we do have some room to run before we start really getting at these lofty levels again. So for the next 2 weeks, I'd like to see this crossover, and that's a good sign for a continued rally. Let's look at the dollar. As you know, tapering. When we a little bit of tapering here. The dollar, the dollar likes it. So what does that mean? That means continued weakness in the commodity sector if the dollar does decide to move higher. Now look, you can see here, major low, high, big, long-legged doji. Now we need to see it really take out this area. We start to really run in a dollar, you're going to see gold really get hammered. And speaking of gold, gold is down 30 handles today in the pre-market session, the GC contract. That is going to crush. Right now, this is the end of the day, but you won't see that. Gold is trading at 1205. So this area comes in 1180. We are now at the lower end, right in this area here. Gold, I believe, will flush in the next couple of weeks, if not going into 2014. That's when you want to buy gold. If you're not short gold yet, and I love gold short, unfortunately, it really never gave me an entry. I need gold to, like, if this area here, we needed one more good candle up, and then we could have shot short gold in here, but unfortunately didn't do that. So if you are short gold, I would look for the big flush down to this area, 1180. Then that entices me to actually get long gold, not to be short gold. And even though gold is in a bear market for a major reversal, in 2014, I think gold would be a great buy in the better areas of 1,000 to 1,100. Okay, so that's what I'm looking for, and palladium just confirms it. Okay, palladium is the silent leader of the precious metals, and if palladium goes lower, so does gold, and of course copper, and the other metals. But copper's a little different right now, because as we know, it's Dr. Copper. It does give you market sentiment, if you will, right? It's a good gauge of industrial production. Copper metal is in a lot of things that industrials they produce, so it's a little different. But let's see what happens. But definitely gold, silver, palladium, platinum. Those are the metals that will see some market weakness if the dollar does continue to move higher. Okay. What else? Well, obviously the TLT. There's a weekly chart of TLT held, but I think any bounce into 105, 104 and a half to 106, I think the TLT will absolutely be a great short. And if this thing did break this area here of congestion, obviously next target would be the 97 area. But if that broke, and I'd be looking for a back test of this area to get short. So it's either going to be this area or, of course, any type of little bounce. All right. Now, with the markets continuing here, I think money will continue to come out of bonds, and we'll go into the market. Now, we didn't get much movement here, but I think this is going to be a good short here. Okay, be patient, but I'd be looking at bonds as well to look to get short. Now, crude oil, very interesting here. It's consolidating at the upper end of the range. We really are sitting underneath that 200-day moving average. To me, I think that crude oil is literally waiting for a breakout here. If USO can break out of this 35.26 area, I think I'd be looking for the next pullback to get long for another retracement rally back up to like 38. And I think that'll happen. That's an easy 3 points in USO between now and, let's just say, the next 2 to 3 months. But this does look very, very bullish. I just like to see one little push lower, one flush lower to look to get long USO. Okay, GLD, same thing. We just covered that. As you can see, right now GLD is trading at 116. So we did break this little consolidation area, that little local low. And now our next area is going to be 114 area. You can see right up in here. That's going to be the next target. A break below that, you're going to see below 110 in GLD. Okay, spiders, as you can see here, nice little move. Just draw that little bit of that downtrend line here. You can see we had that downtrend, and we are now breaking back above it. So we got plenty of room here, guys. 183, 185 is the upper end of this channel range. So plenty of room to run and to get into the channel from 2012. So a lot of room to run, at least to the upside. Okay, diamonds played catch up, as you can see. Big move up. Now we're challenging the highs again. So, a little rest today, a little bit of a pullback. I'd be buying the dip and look for continued highs. That's for sure. Transportation sector looking really good here. Moved right back up. Took that reversal candle. And we did close outside of the previous day bar. So quite bullish in the transports. This is our main leader here, the IYT. Okay, IWM's our secondary leader here. As you can see, big move up. Risk on. No question about it. Plenty of room to run here to catch to the highs. And again, just what we're talking about, as you can see, the pattern recognition, money is flowing back into stocks. The uncertainty is over. I'd be looking to be buying pullbacks just about almost every day. I mean, if you get a good down day, a profit taken, I would be looking to buy into that. Okay, and that's the XLF. Banks did fantastic. Goldman not only did reach our target, it exceeded our target. Right now, Goldman's gone. I mean, that's something that I'm not looking for until we get at least a good 50% retracement. Then I would look to reevaluate it. Wells Fargo, I mentioned to you, great trade setup. Citibank rallied. JP Morgan, what can I say? Big move higher. And this is going to be the bank that I would be looking to accumulate going into 2014. Came out of a nice bull flag. You can see the flagpole, the flag, and continuing higher. I'd be looking at the highs here at least going into the end of the year. Okay, and the IGN, if the market's going to rally, so is the technology stock. So this area here of the IGM looking really good. Still in our head and shoulders pattern. Very boring, as you can see. It's not quite doing much, but it is moving higher. I'd be looking for probably at least a test of the 3090 here. And then Apple broke down yesterday, actually, so not really too good. But if you were paying attention and you like the way this area of support is, and this is what I said right up in here, 538, and look right to the penny, 538 or the 20. It got back above the 20. Now, if it could take out today's high, Apple would at least start to move higher again, at least to challenge the high. So Apple, to me, it's just a very, I'd like to see it literally come back in a little bit more, but for trade, it's not doing too bad. We had some news out on Apple. I think something with China Mobile, still negotiating contracts, and something happened with it. I think it got a negative mention. And then lastly is the Qs, as you can see, moving higher. So far, we're humming on all cylinders. Yes, the indicators are telling us otherwise, something different. But end of the year, Santa Claus coming, the rally is back on again. So I wouldn't be chasing here at these levels, but if the market can open a little bit lower, we're down about 2.5 in the E-minis, I'd be looking to look for quality stocks that have pulled back into some good bases, and then wait for a trigger, and then re-enter the trade. That's my bet for now until the end of the year. So the next 2 weeks, that's going to be my strategy, is to buy pullbacks, good quality stocks that have pulled back into bases, and look for an entry to get in. All right, guys, hope that helps. Have a great day, and we will speak to you tomorrow.